What's happening, crypto enthusiasts? Get ready for a whirlwind tour of the digital asset universe because the news cycle is absolutely on fire. We're talking seismic shifts and groundbreaking moves that you absolutely cannot afford to miss. Forget the sidelines, you're in the front row for the future of finance. The pace is relentless, the stakes are sky high, and today's updates are guaranteed to be game changers. Are you ready to dive in? Let's go. First up, we've got a major player making a bold declaration, integrating Bitcoin into its very financial core. This isn't just a small adjustment, it's a fundamental reimagining of corporate treasury, potentially setting a precedent for industries worldwide. What does this mean for stability, for growth, and for the future of how companies manage their assets? We're breaking down the strategy that could define a new era. Then, hold on to your hats, because Wall Street giants are signaling a massive embrace of crypto. We're talking about the potential for spot Bitcoin and Ethereum trading to land on the most iconic exchanges. This is the convergence we've all been waiting for, blurring the lines between traditional finance and the digital frontier. Get ready for unprecedented access and a whole new ballgame. But wait, there's more. Our favorite digital gold is making waves, attempting a significant reclaim of a major price level. What does the technicals say? Are we on the brink of another explosive rally, or is a correction on the horizon? We've got the analyst insights you need to navigate these choppy waters. And finally, we're seeing some altcoins making power plays, with one specifically jumping 5% in a single day while Bitcoin hovers around a critical mark. What's driving this surge, and what does it signal for the broader market? Stick around, because this is the intel you need to stay ahead of the curve. Don't go anywhere, smash that subscribe button, ring that notification bell, and get ready for the Bitcoin Bulletin. A corporate finance revolution. CIMG Inc. is making waves by integrating Bitcoin into its corporate treasury, a move that could redefine how traditional businesses manage their assets. This significant decision involves the sale of 220 common stock shares at 25 cents per share, totaling a substantial $55 million. These funds are earmarked for the acquisition of 500 BTC tokens, forming the bedrock of CIMG's new Bitcoin treasury strategy. The company's CEO, Wang Jianshuang, has articulated a vision to pioneer a new era of Bitcoin financial applications, aiming to become a leader in corporate Bitcoin finance. This initiative follows Beijing's recent announcement about incorporating Bitcoin into their financial portfolio, signaling a long-term reserve strategy. CIMG's approach is particularly noteworthy as they are building their Bitcoin reserve through equity rather than debt, setting them apart in the rapidly evolving crypto treasury landscape. CEO Wang Jianshuang emphasized the growing recognition of Bitcoin and blockchain technology, stating, "The growth and recognition of Bitcoin have opened new avenues for traditional businesses to integrate organically with the innovative blockchain system. We aim to pioneer a new era of Bitcoin financial applications and become one of the companies engaged in Bitcoin finance." The company also plans to expand its crypto reserves and actively seek partnerships within the AI and cryptocurrency sectors, indicating a forward-thinking and integrated approach to digital assets. This move by CIMG aligns with a broader trend among publicly traded companies. Currently, corporate treasuries collectively hold approximately 1.5 million BTC, valued at roughly $165.3 billion. A significant portion, 7.11% of Bitcoin's total supply, is held by 129 public treasuries, with industry titans like MicroStrategy and Tesla already prominent players. However, CIMG's method of funding its Bitcoin acquisition through equity financing, rather than relying on debt, highlights a unique and potentially less risky strategy compared to some of its predecessors. The potential benefits for companies like CIMG are substantial. Integrating Bitcoin can offer enhanced financial stability and unlock new growth opportunities through asset diversification. By including Bitcoin, businesses can potentially achieve a balance between growth potential and the stability and liquidity of their treasury assets. Furthermore, the utilization of stablecoin treasury solutions could significantly improve capital efficiency and mitigate float risk, particularly beneficial for multinational corporations operating across various regulatory and economic environments. However, the inherent volatility of Bitcoin presents a considerable challenge for traditional businesses. To navigate this, companies must adopt robust risk management strategies, including maintaining diversified asset portfolios and sufficient cash reserves to absorb price fluctuations. An over-reliance on Bitcoin without proper diversification could potentially distract from core business operations, making transparency and strong governance paramount for maintaining investor confidence. Regulatory hurdles also remain a significant consideration. Bitcoin's decentralized nature complicates adherence to anti-money laundering, AML, and Know Your Customer, KYC, regulations, necessitating considerable investment in compliance infrastructure and advanced transaction monitoring systems. But is this the only major shift happening in the financial world? We're about to see if Wall Street is ready to go all in on crypto. Wall Street's crypto greenlight. In a landmark development, a joint statement from the U.S. Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, has paved the way for major Wall Street exchanges to offer spot trading for Bitcoin and Ethereum. This collaborative move signals a significant step towards integrating digital assets into mainstream U.S. financial markets, providing much-needed regulatory clarity. Matthew Sigel, head of digital assets research at Van Eck, highlighted the implications, stating, "The NYSE, NASDAQ, CBOE, CME, etc., will soon have spot trading for BTC, ETH, and more." This is a direct result of a joint SEC-CFTC staff statement clarifying that registered exchanges are not prohibited from facilitating spot trading of certain digital asset products. These initiatives, part of the SEC's Project Crypto and the CFTC's Crypto Sprint, aim to foster regulatory consistency, promote venue choice, and drive innovation within U.S. markets. SEC Chair Paul Atkins, as quoted in the announcement, emphasized the importance of this development. Today's joint staff statement represents a significant step forward in bringing innovation in the crypto asset markets back to America. He further stressed that market participants should have the autonomy to select their preferred trading venues for spot crypto assets, underscoring the SEC's commitment to nurturing competition in these dynamic markets. CFTC Acting Chair Caroline Pham echoed this sentiment, contrasting the current proactive approach with the previous administration's stance, noting, "Under the prior administration, our agencies sent mixed signals about regulation and compliance in digital asset markets, but the message was clear. Innovation was not welcome. That chapter is over." Analysts view this coordinated action between the two leading U.S. market regulators as a potential turning point for crypto integration into traditional finance, TradFi. By removing regulatory ambiguities, the SEC and CFTC have effectively cleared a path for premier equity and futures trading platforms to host spot crypto markets. Elinor Terrett, host of the Crypto America podcast, described this as a landmark achievement in regulatory cooperation, a sentiment echoed by independent analysts like Trader Bullish Beast, who called it a significant move that will enhance market clarity and expand trading opportunities. If these expected listings materialize, Bitcoin and Ethereum could soon trade alongside established blue-chip stocks and traditional futures contracts on some of the world's most trusted financial platforms. This integration has the potential to drastically reduce friction for institutional investors seeking exposure to digital assets, thereby improving liquidity and lowering the barriers to widespread adoption. The timing is particularly critical, given the intensified global competition to establish leadership in digital asset markets, with Asia and Europe already making strides in developing crypto trading frameworks. The SEC and CFTC's alignment sends a clear message about Washington's intention to position the U.S. as a leading hub for regulated crypto markets. This effort aligns with the recommendations from the President's Working Group on Digital Asset Markets report, which called for strengthening American leadership in digital financial technology. For Wall Street, the approval to offer spot Bitcoin and Ethereum trading could usher in a deeper convergence between the crypto ecosystem and traditional capital markets, marking a new chapter in financial innovation. While the institutional world gets ready for crypto, what's happening with Bitcoin's price action? We're diving into the charts to see if Bitcoin is on the verge of a major breakout or a significant pullback. Bitcoin's price crossroads, $111 K target and cycle peak predictions. Bitcoin is currently navigating a critical juncture, attempting to reclaim the $111,000 level as support after a recent dip. The flagship cryptocurrency saw a 4% bounce from its recent lows, retesting a crucial resistance zone that could dictate its next move. As September commenced, Bitcoin retested the $107,000 range low before experiencing this upward momentum. Analyst Ali Martinez observed that Bitcoin has been trading within a descending channel on the 4-hour chart for the past 2 weeks. The cryptocurrency successfully retested the channel's upper boundary, around $110,700, and broke above it. Martinez suggests that a confirmed breakout above $110,700 is necessary for a meaningful rebound, potentially setting the stage for a test of $113,500. Conversely, failure to hold this resistance level could reinforce bearish sentiment and lead to a deeper correction, especially as the super trend indicator maintains a bearish stance at $110,700. Another analyst, S. Jewel from Alt Crypto Gems, believes Bitcoin might be replicating its previous pump patterns. Following a new all-time high, Bitcoin entered a corrective period and has formed a falling wedge pattern, suggesting a potential breakout. S. Jewel identifies $108,000 as a key support level, where holding could confirm BTC's strength on higher timeframes and indicate a flip of resistance into support. However, failing to maintain this level could risk a more significant correction down to $98,000, where the weekly EMA 50 is situated. S. Jewel characterizes this as a critical juncture for Bitcoin to maintain its upward trajectory. From a higher timeframe perspective, Rect Capital noted mixed signals. Bitcoin failed to close the week above $109,000, a level that previously acted as the final weekly resistance before new all-time highs. This could be an early indicator of bearish confirmation on the weekly chart. However, Rect Capital emphasizes that the monthly chart presents a different narrative, with Bitcoin successfully holding its macro range between $107,200 and $116,000. Monthly candles have consistently shown long downside wicks, indicating that despite weekly pressure, the broader market structure remains intact. Deep retests often precede trend continuation in Bitcoin's history. Looking ahead, heightened volatility is expected this week, with potential for Bitcoin to briefly touch $104,000 on a wick. Rect Capital suggests that if the weekly timeframe confirms rejection from $107,000 and progresses with bearish confirmation, it could trigger such a monthly wick. In this scenario, the primary goal would be for the price to resynchronize with the monthly range before the monthly close to preserve the macro structure and set up for a final upward leg. Furthermore, Rect Capital analyzed historical bull market cycles, noting that previous cycles lasted approximately 152 weeks. The current cycle is already at 145 weeks, suggesting that if history repeats, there might only be about 7 weeks remaining until a potential cycle peak. If Bitcoin's bull market peak aligns with historical halving cycles, occurring around mid-September or mid-October 2025, it could mean the peak is either 2 weeks or 1.5 months away. With Bitcoin potentially nearing a cycle peak, what's happening in the broader altcoin market? We're checking in on some altcoins that are making significant moves, including one that's jumped 5% today. Altcoin surge amidst Bitcoin's consolidation. While Bitcoin continues its slow climb, reaching highs of $111,800 before a slight pullback, the broader altcoin market is showing signs of life. Notably, Avalanche, AVAX, and Bitcoin Cash, BCH, have posted impressive daily gains of around 5%, outperforming many other cryptocurrencies that have remained relatively sluggish. This divergence in performance highlights the potential for altcoins to gain traction even as Bitcoin consolidates around key price levels. The market appears to be in a phase where specific narratives or technical setups are driving individual altcoin performance, rather than a uniform market-wide surge. For Avalanche, a 5% daily jump suggests renewed investor interest or positive developments within its ecosystem. Similarly, Bitcoin Cash's gain indicates a specific market dynamic favoring this particular asset. These movements come at a time when Bitcoin itself is at a critical juncture, attempting to break through resistance levels that could signal further upside or a potential correction. The performance of altcoins like AVAX and BCH can often be seen as leading or lagging indicators for the broader market, depending on the underlying factors driving their price action. Analysts are closely watching these altcoin movements to gauge overall market sentiment and identify potential opportunities. A sustained rise in select altcoins, while Bitcoin remains range-bound, could indicate a rotation of capital or a growing confidence in the utility and potential of specific blockchain projects. For investors, understanding the drivers behind these individual altcoin surges is crucial. Factors such as technological advancements, partnership announcements, ecosystem growth, or even speculative trading can contribute to such performance. The 5% jump in AVAX and BCH warrants a closer look at what might be fueling these gains and whether they represent a sustainable trend or a short-term price fluctuation. This market behavior underscores the complexity and dynamism of the cryptocurrency space, where significant opportunities can arise from focused analysis of individual assets within the broader market context. We've covered major corporate moves, Wall Street's crypto embrace, Bitcoin's price action, and altcoin performance. Now, let's wrap it all up with a quick recap and a final call to action. And that's a wrap on today's explosive crypto news. We saw CIMG integrate Bitcoin into its treasury, signaling a new era for corporate finance. Wall Street giants are poised to offer spot Bitcoin and Ethereum trading, bringing crypto to the mainstream. Bitcoin is battling at $111,000, with analysts debating the next big move, and altcoins like Avalanche are jumping 5%. Don't miss out on any of these critical updates. If you found this valuable, hit that like button, subscribe to Bitcoin Bulletin for more, ring the notification bell so you never miss a beat, and let us know your thoughts in the comments below. Follow us on all social media platforms to stay connected. We'll see you in the next one.